going to be talking about referring business purpose loans to the mortgage calculator. So for those of you out there who have loans that you could refer, whether you're a realtor or a loan officer, you do not even necessarily need to be licensed to send us business purpose referrals and make a referral fee. So that's what we're going to be talking about here today. I'm going to pass it off to our president, Nick, here, who is going to go over a presentation of how this works. And then our sales manager, Jose, with 28 years of experience as a loan officer and a realtor, will talk about how you can use these to generate new business for yourself and generate income. So Nick, if you're ready, you can go ahead and take it over here.
Good, thank you, sir. Let me go ahead and get my screen share going here. And we can check out the presentation. So as Kyle mentioned, we're going to be talking about our solutions for our investors that allow our commercial referral partners to earn income along with us. So we'll get right into it. First off, the products that we can offer. So DSCR loans, I'm sure you guys have probably heard of these before. That's definitely the most popular loan type right now for investors on the traditional 1 to 4 multifamily properties. And we can also do our commercial loans, our mixed use loans, definitely a very unique twist to the DSCR. Multifamily, so anything over 4 units is going to be technically a multifamily. So we have a lot of options for those as well. And then another very, I would say, newer product are the HE loans, the second mortgages for our investors in order to leverage their properties in a little bit different way, since a lot of investors already have low rate first mortgages. And we also have our portfolio loans, definitely something that Jose likes to talk about, a tool that we use for a particular set of investors that need to use that. Now, why do you want to partner? Of course, obviously we can earn revenue, so you can earn 75 basis points referral fee on our business purpose loans. So that means they're closing in an LLC and a few other requirements. Obviously, make sure you read through that. We're going to have products from over 100 banks and lenders and partners that we have. So not only do we have our in-house stuff, but we also can partner with other investors and lenders out there. We're always going to have our best non-QM rates and terms. That's our focus here. That's what we're always focused on, having the best DSCR options out there. And you guys can check out our pricing and our online rate quotes instantly and make application instantly, and so can your customers. And we can do this in 44 states overall. There are some tricky ways we can get around some of those other options as well. So a great opportunity for those that are maybe already licensed to expand their footprint, or maybe that are already licensed in other ways, like our real estate agents and brokers out there can expand their footprint to states beyond where they're doing their regular transactions. Now let's talk about DSCR loans, the most popular loan product that we offer. Our flagship mortgage product, obviously, is for real estate investors. These are definitely popular for business purpose loans. Most of these close in an entity, and of course, to be a business purpose, it needs to. So DSCR, the definition of DSCR is the gross rents. So the gross rents from the appraisal is what we use typically for a purchase. And we put that over the PITIA, the expenses, right, of the property. If the property cash flows, that DSCR ratio that it equals out to will be higher than 1. If the property doesn't quite cash flow, that ratio will be under 1. So most of the best rates and terms are going to be for a ratio over 1 or even higher, but we even have options for ratios down to 0. Basically, we don't look at the ratio, we're still going to do the calculation, but it doesn't necessarily affect the pricing or the qualification of the loan. We have 30 or 40-year terms, definitely very cool options. If you check out some of our live rate shows, you can see some examples there. And fixed or interest only. So those are some of the cool things we can add on when we get into these DSCR loans that allow us to be very flexible. We can do up to 85% LTV for our purchases out there. That's typically for a 1-unit property, but that's our most common request. And we can do up to 80% LTV cash out refinance, even with no seasoning, which I'm sure Jose would like to explain as well. And some of our other DSCR specialties, just to go over again, short-term rentals. That's definitely a tool that we use for our short-term rentals out there. And we can do up to 85% LTV, as I mentioned, for a 1-unit if we can use the long-term rents. If we can't use the long-term rents, we need to use the short-term rents, no problem. We can do up to 80% LTV using the short-term rents for a DSCR. Very great option that we have for our short-term rental purchases out there. Rural properties definitely are eligible under a subset of these programs. Not all of them allow it, but we do have those options that allow it. Manufactured homes, definitely a very cool subset of these programs that we offer. Investors love those manufactured homes. Definitely some of the lower priced properties that are out there in a lot of markets are manufactured and typically not able to finance, but we can do it here. No seasoning cash out refinance. Again, Jose will explain more about that. Definitely one of his favorite things. And our fixed rate second mortgages that I mentioned earlier are a way for us to add a DSCR option onto our first rate mortgage that we may not want to refinance. Now, what types of properties are eligible? I mentioned rural, that's kind of a subset, but in general, 1 to 4 unit residential, 5 to 8 unit small commercial residential. Sometimes we can push that up to 10 units as well. 2 to 8 units mixed use, and sometimes up to 10 units for certain cases for those small commercial mixed use properties. And then we have our giant 9 to 100 unit multifamily residential programs if you're looking for someone with a very large property. Short-term rentals, we mentioned before, condotels, the original short-term rental property, and portfolio loans, which would be 3 or more properties together. A lot of times, Jose will explain how you might be able to use that for the properties that may be at a lower value to combine those and make a more attractive offering for our investors and get those under a DSCR program. Now, what types of borrowers are eligible? US citizens, obviously, but also we have I-10 options. We have foreign national options. We have first-time homebuyer options and even first-time investor options. So all kinds of different options there. Definitely check out the different programs. Obviously, not all of them work for I-10s or foreign nationals or first-time homebuyers or first-time investors, but we have options for all of the above. Now, commercial loans, we have your traditional commercial loans, office, retail, shopping centers, hotels, industrial storage, gas stations. We obviously can offer for anything: land, ground up construction, assisted living, fix and flip, hard money. If there's programs that offer it, we'll definitely get those going for your customers. And how does it work? Simply use your referral link. So once you sign up, you'll get a link that looks like that, the quick quote with your special code on it. Your customers can go there, type in their basic info, get their quote set up. Our team will go ahead and quote those. And you can reach out to your MLO anytime, so you'll be able to track that deal through there and help push it through the process. And you'll obviously have your portal where you can see the different quotes that have been submitted. And then once they get to closing, you'll be able to get those invoices paid out within 10 days of closing once the system processes everything on the back end. Now, the next slide here is pretty boring, just a disclaimer. So let me go ahead and pass it over to Jose, who can go over some of the details of how he's used these programs recently and in the past for his clients, both as a mortgage loan originator and a realtor. So a lot of our people watching out there are probably from the real estate angle, whether they're investors or real estate agents or real estate brokers with a team. Definitely want to make sure that they understand how this is a tool that they can use to their advantage. So Jose, can you give them some specific examples, please?
Yes. Good afternoon, everybody. Thank you for joining us for today's referral partner webinar. So Nick already went over the program, so let me give you some ideas on how we have been able to utilize this to generate additional business for ourselves as well as for our referral partners. Now, first, let me give you some examples of who would be. Now, this is not an exclusive only these people, these groups, but who would be perfect as referral partners for this group. We're talking about, for example, real estate agents, right? And I'll break it down in a minute how, but real estate agents, we're talking title company agents, insurance agents, and investors, especially the investors, because, investors not only your own properties, but you are usually part of an investment group. You probably have virtual meetings or in-person meetings where you definitely have the pulse of what's going on with your investor, with your investor group friends, and obviously can spread the word on this program and probably recruit a few of those deals and put them into your pipeline. So what type of deals are we talking about that you can generate? Well, for example, cash deals, hard money deals, or deals that may have been purchased with fixed flip loans. And how would we be able to assist here? Well, Nick was mentioning, which was actually the topic of our daily rates this morning, are no seasoning cash out loans, right? That's a great vehicle because if you are on title today, we can cash you out tomorrow. Now, this is for our DSCR loans, debt service coverage loans, which only use the gross rental income generated by the property to qualify the borrower. And then obviously, in order to be a true business purpose loan, they would have to have closed or be closing this current transaction that you're going to refer. Would have to be closing in an entity, which would be either LLC or some type of corporation or limited partnership, which are the three most common forms of business purpose loan entities. So, for example, your customer, your prospect buys cash, and because the property may have had some condition issues, now they turned around and they repaired that property. Property is now in condition to be able to refinance. Again, perfect candidate for our no seasoning cash out refi, our DSCR, actually DSCR, cash out refi without any seasoning, where you can turn around and reach out to every cash deal that you did and ask them if they're interested in getting their money back so that they can put it back into circulation and buy some additional properties, generating additional income for our real estate referral partners. And obviously the mortgage calculator would do those loans, and it would be a win-win-win situation. Win for the win for the borrower, win for the referral partner, and win for the mortgage calculator. Hard money loan, same situation. They may have purchased a property hard money because maybe it had condition issues, or maybe they just didn't know that this amazing DSCR loan program exists. Again, you can go back to all your past deals and you can revisit the deal and offer them the no seasoning cash out refi. Or if it has been 6 months since that transaction closed, then that definitely opens up the channel to do all types of DSCR loans, because 6 months is usually the cutoff line for seasoning on most of the DSCR options. But again, as I mentioned, we do have no seasoning options. So hard money purchase, they're thinking, oh man, this loan's only going to be good for a year, 2 or 3 years. So let's eliminate their stress and let's refinance them out of that hard money loan into a DSCR loan. At the same time, doing it as a cash out refi, putting more money back into their pocket so they could take advantage of the great opportunities out there and purchase some more rental properties. Fixed flip loans, which is a type of, I guess, hard money private type loan, if you want to call it that. Fixed flip loan, they may have purchased a property with that type of loan because it had condition related issues that would not allow it to close with a regular DSCR loan. Again, our no seasoning DSCR cash out option, the perfect vehicle to get them out of that loan without having to wait 6 months or 12 months, putting money back into their pocket, because you know the investors are always wheeling and dealing and love getting their money back, whatever they put down, maybe the renovations, a little bit extra money on top of that, so they can keep investing, right? We also mentioned with our investor referral partners, either for your own deals or for any deals out there that those other investors in your groups, the needs that may arise, you're the one that's going to be aware of those needs. And then what better situation than to offer them a solution, which they're going to be very thankful about, the no seasoning DSCR cash out, and you make 75 basis points on top of that. And again, our title insurance agents would be great partners. You're closing the deals, right? You know that was cash, that was hard money, whatever type of deal it was, where you know they can better, but from the deal, the rate that they even closed at, and that our DSCR cash out seasoning rates, worst case scenario, are at 8.5% interest rate. I think I remember from this morning's show, and they can buy it down all the way to 7.125% rate. Now that's better than any hard money I know. That's better than any fixed flip. Plus those fixed flip loans are only good for 6 months to 12 months and they have to get out of it. So why wait? So plenty of opportunities here, as well as our insurance partners. You know that they did a builder's risk and now they're gonna get out of, they probably need to get out of that loan. So, you know, definitely reach into your database. Don't leave any money on the table and try to create opportunities and have a further additional incentive knowing that you will make 75 basis points on that transaction. So it's a win-win-win situation for everybody. So we're definitely looking forward to assisting all of you as you join up into our business purpose loan referral program and start referring those deals, providing solutions to all of your friends, families, investment partners, and anybody else that you can think of.
All right, so I just put the link to sign up in the chat. Let's talk about real quick how this works, the next steps. So if you go to themortgagecalculator.com and you go to contact, we have the refer business purpose loan link here. I put that in the chat as well. And you are going to go ahead and just sign up here, and then we're going to give you your own custom link, and you're going to be able to send people to that link for them to apply. And as Nick said, it is all tracked over to you. So those are the next steps to move through the process. I went ahead and put the link up there in the chat, and I don't see any questions